Welcome to Bears in Exile. Today is Wednesday, May the 1st, and this is a quick hit on the indexes. Before I start off, my voice is going to be different. I'm getting over surgery, and anyways, that's what happens, I suppose. Going right along to the Dow. So, we had been looking for the Bears to do something the last few videos, and the move yesterday on many of the charts was looking towards a breakout. And some of the charts it did. Today we had a nice move down. Does that mean that all of a sudden the Bears are back in the saddle and the Bulls are finished, and the Bears were just being fashionably late? All good questions, and I think that there's some interesting things to look at that at least will give us a better view of what everything looks like. The Dow was nice, down 100 and almost 39 points. There's some good and some bad here. For one, we had a downtick today. It was resolved intraday. So there's nothing useful at this moment from the short-term moving averages. That's unfortunate. We still have a ways to go before the long-term moving average bar is hit. It definitely should be some support, as we still have good separation and extension associated with it. We still have yet to hit the upper price consensus level from the previous month. So there's plenty of challenges here. We do have a new set, because in the new month we closed just below the major price consensus level for the new month, and pierced but did not get close below the lower price consensus level. So very interesting. Beyond that, indicator wise, we have the Fortune Day RSI moving average still pointing down, which we've been watching this whole time. We finally have what would appear to be secondary reset done on the fast stochastic. Slow presumably would follow. Rolling over on the CCI, the RSI, the MACD, and a tick down on the MACD histogram. Overall, very bearish looking. There's nothing in the heat map one way or the other. But do we trust this to have a straight shot to the bottom? I do think in the longer term, medium term, that we will be going with a really nice swoon in the market. But right now, here is the 60-minute. Daily looks poor. There's no doubt about it. How does the 60 look? Well, it is interesting. We are pretty darn low on the stochastics already, and the CCI. The RSIs are already flattening out. Still going down on the MACD histogram. Still have room to move on the Fortune Day RSI moving average. It would seem likely that at this time we would need a reset in the 60-minute time frame before finishing off the move to the downside in the 60. That just seems natural at this point. Beyond that, we're right into support. We blew through this support, but we're right into another one, and we have another one just below that. So is this a good place for it to have a bounce and reset everything? Yes. We have a blip in the heat map. All seems logical. Overall, still the daily looks poor. Going on to SPX and see if there's any difference. And saying about the breakout yesterday, and yeah, it broke out just by a hair. Today it did get a downtick. The downtick was not resolved intraday. It did a good amount, but we would be looking for just above 1578. That would be the downtick target. 4 days to resolve. Massively easy to do that. I have no doubt that that'll be achieved one way or another. The daily does just like the Dow. It looks poor. Everything ticking down. Everything moving down. Actually, and there's a little more development because the slow stochastic is also pointing down. But overall, very bearish daily, even a little more bearish than the Dow. But the 60-minute, does it need to reset? I believe the answer is yes. Yes, yes. I think that's enough just by itself. So, entirely natural to get a bounce this time. Uh, Normally, that should be a bounce up and then a continuation to the downside. The only thing being, if it's able to take out the current high on its bounce, then watch out because the bears will get roasted. So I'm still just a little bit leery, but if we're able to reset the 60 and not beat the high and start to roll again, I think that that'll be beautiful. Going on to the VIX. Last few videos I was saying, we were up in the market pretty darn good, and the VIX was just hanging tight. Of course, there was no video last night, so I didn't address this one right here, but I would have said that pretty darn good since it didn't get under the major price consensus level. So, today, getting a nice move up. It went right and just barely pierced the upper price consensus level from last month, and then hung back a little bit. The question at this time becomes, can it best the 200-day moving average? And I think there's a pretty good chance that it will, because last time we were up here, we had all of these little points that we were trying to beat, previous highs, and it came up and it did beat them. It didn't beat this one, but it did pretty good. And now we have ascending lows. So, do the bears have a chance of beating a recent high? Yeah, sure they do. Certainly they do. But it's not to say that this is perfect either, because we can also see that we don't have too much time before the fast stochastic gets overbought. So if the bears are going to do something, they have to do it pretty darn soon. And if they don't, you can see we had a tick down in the 14-day RSI moving average today, even though it was positive. We do run the risk of having everything go up high enough where it rolls over and the 14 travels to the bottom. So there is some danger here. Absolutely, the bears have the ball in their court as far as the VIX goes, but can you trust them to take it and run with it? That has been a problem for a while. Going on to IWM, the small caps. Now this is really pretty. We've been saying in the last few videos the descending highs, how they were not taken out, how they were not challenged as the Dow and the SPX went on and just had much more development. It did try to play some catch up, but today just falling to pieces, more than twice as hard as the Dow and SPX. Going back into the long-term moving average bar, which had already been cut in half from our last little foray down here. So we know that the support is weaker. We know it. The question becomes, can we make a new lower low? That I'm not sure of. Reason for that being, 14-day RSI moving average is now in descent. We have the stochastics moving down along with the CCI and the RSI and the MACD and the MACD histogram. But for the moment, we could look at this and say, okay, well, this is a secondary reset to the bottom, so this can go up. So while we do have definite bearish tendency in the short term, we cannot count on this to hold for an extended period of time. If we were to break out of the lows, I have no doubt the 14-day would turn again, and that would be fantastic for the bears. But for the moment, it is pointing up, and we cannot really trust that it is going to take out these lows. It might be subdued. We might make a higher low. And going on to SPY for our volume information. Now this is really interesting. We have been tracking especially the on-balance volume and its little whipsaws and head fakes and games that it likes to play. And on the last video I was telling you that we're in trouble with the miners going positive. And even with today's down, we are in more trouble now with the miners going positive than we were before. Volume price trend curling up. There is still a little bit of room. Accumulation distribution continues to march up. This is just unbelievable, but it is what it is. The volume weighted MACD, look at that, curling up. You could have a turn tomorrow to a green. The on-balance volume did have a slight tick down. There is some room here. It is small, but there's a little bit of room there. Even with another red day, it could maintain above the target line. And the dual volume flow also curling up. Once again, this could go green tomorrow as well. Potentially, we could have 4 greens tomorrow. And then watch out, because everyone's getting bearish after today. Very dangerous. Very dangerous. So, anyways, don't want to be a killjoy. Just want to look at and see what we can see. And while we can see definite potential on both sides, we can also see that there are some definite warning signs, especially in the midterm. Immediate term, I definitely do favor the bears, but smack them around for one more day, and it's probably all over for them. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.